Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good morning, everybody. I hope everyone's doing okay. Today we have seen quite an interesting development happening in the charts. The question is, we've had this really unusual couple of days of really significant drops, and then we had a massive bounce, and now we're coming down again. And the question is what does this mean? Like, what is this formation in the charts kind of showing us? Some people don't really understand the true technical chartists. They believe that all information exists in the charts because price is a reflection of people's thoughts and sentiment about all relevant information out there. So even though there are fundamental things, and I believe there's a mix. I believe that this move here definitely had something to do with the current events, the news. I don't think technical chartists really could have predicted this move. But once the kind of information is thrown out there and the market makes a move, it goes right back to psychology. It goes back to the way people think, the way people feel. How would the average person react to moves like this, and where would it go next? And that's kind of the way I look at it. You know, we do the best we can to plan for what information is given to us, and then if we get if a brick goes through the window and things change, then we have to modify and go with that. And that's where the risk management really comes to play. And those on the pro channel are seeing how that can really make a difference. You know, if you have your risks managed, none of this will really impact you. It's just a matter of being patient and waiting for markets to move. But I wanted to talk about this structure. So if we take this example of markets dropping, the response was awesome. What we really wanted to see was a close that was above 50% of this red candle here. And the 50% mark was around 17,300, something like that. And we got it. Yesterday, Bitcoin closed above that 50% mark, which shows that there is strength. Anything below this and it could melt down into a continuation. But because of this candle, there is a very high likelihood that this became our selling climax and our local bottom. And what would confirm that? The confirmation of this would be that today's candle closes above the 50% mark on this candle. So if we closed right here, which we still have 7 hours, so anything can happen, but we have the emotions and the response in this market, in this chart here, show that we are now oscillating and we're kind of recovering from this. So we should have a little bit less dramatic days ahead of us. And I think it's only a matter of time that we'll break the tops here. We're not in a hurry to recover this though. A move like this will take a good solid 4 to 8 weeks to recover from. So we have to be buttoned down. For managing risk, we need to make sure that we have the funds moved to the right places to make sure that our trades are in a safe place. and we need to kind of buckle down. If this is our local low and potentially our forever low, like this could be it, it's just a matter of being patient and waiting through some of this. This is the hard work of trading, is being able to deal with the emotions of markets going against us for a long period of time, but still staying true to our strategy, not trying to make back anything really quick. We don't want to make bigger risks because things went the wrong way. We want to make the same or lower risks to recover, and it will happen naturally. And I'm teaching this on the pro channel. So let's look at this a little bit further. There is a development. Well, actually, I'm going to keep going down the rabbit hole of where we're headed and where we're going. So my AI, as I've mentioned, is not very helpful. The AI, I just popped it in just to see if there was anything here, and the variance is so high, it's not even really helpful. But there is a little bit of information to kind of talk about the last few moves. So if I go into my data, and I'm just going to say this is, so T-1 is yesterday, or in other words, today. This is where I'm putting our current data. Then this is 2 days ago, 3, and then 5. So between these, we can say, okay, in the last 5 days, whatever chart pattern the chart gave us, let's find the most like situation that matches the last 5 days rather than the last 55, because there's nothing that does that even close. And to do that, I'm just going to delete all of this out, and then I'm going to rerun it, and we will look and see. And by the way, we're only looking at the next 5 days, because if we're using the last 5 days to kind of gauge, where we're headed, we really can only look to about here for information. And to be honest, even this isn't very good. For 4 data points, our best data is 1.5% off per day or per data point. So it's not super precise, but I think that we can at least get a little bit of information. So what I'm saying is we need to narrow our view. We're not looking at this whole chart. We're looking at the prior 5 days and the projected 5 days. So we had an experience where we're down, we've bounced, we had a small red. This kind of shows a little bit of that movement. We finally got a green and then a little bit of a red. And this is obviously a different formation, but you can see how there's a tendency to have a little bit of a rise in the next few days. So I think that there's going to be a little bit of emotional relief in upcoming. This one still has a decent amount of variance, but let's just look at the portion. There weren't 2 big drops in a row, but at least we got one, and we had a little bit of recovery. And so we're kind of thinning out our oscillations, and then we're starting to move a little bit higher. So then let's take a look at another data point. Here's one that we did do several days of dropping, and then we had a big green. So here it's hard to zoom in because the chart's just really small, but you can see that the red has actually dropped more than 50% of our green bar, and it gave us a couple more days of down, and then we kind of recovered. So in other words, we're getting close. I think we're about to a point where we're starting to see these selling climaxes, they usually create bottoms, and we'll kind of oscillate a little bit above it, and then we'll start creating more chart structure, and then we can kind of navigate and move on from there. But just because Bitcoin has found a local bottom does not mean alts have. There's plenty of other factors, and they're way more volatile, so you just have to have a little bit of care when you're dealing with this. So I'm going to close this and not save it so that I don't make a mistake there. But I wanted to point out another thing that it's just very fascinating to me. I'm going to compare Bitcoin versus Ethereum, and there's a tangible difference happening, and I want to see if you guys can spot it. So on the left is Bitcoin, and this is the daily chart. On the right, we have Ethereum, and we'll kind of ignore the background. So red zone versus yellow zone, we'll just ignore that for a minute. And I want to, can you see a little bit of a change happening? And if you can't see it, that's fine. But Bitcoin has always been the least volatile. It's always been the least volatile. When it moves a lot slower than the rest of the market, and Ethereum acts like a more volatile altcoin than Bitcoin. And so I'm just looking at, I guess I can really zoom in here. Okay, so hopefully you can see my crosshairs. They line up on both sides of the chart. So our big drop was the first day. On the left, Bitcoin dropped 9.91%. On the right, Ethereum dropped 14.9%. So the response, so Bitcoin's 10% response, 10% action gave Ethereum a 15% response. So there was a 50% increase in direction or increase in magnitude. So 50% more, and this is very typical. You would have normally seen this happen on Ethereum because it would be more volatile and less robust as Bitcoin. Well, now look what happened the next day. So I'm looking at the really big bottom. So Bitcoin on the left, it lost 14.16%. And on the right, Ethereum lost 17.35%. So 17.3, so roughly 17.3 divided by, and I already forgot my number, 14.16. 14.16. Now it's 22%. So the action of Bitcoin dropping 16% or 14%, it translated it into an Ethereum move of a 22% increase. So very interesting. So we went from 50 to 22. Suddenly, Ethereum is becoming less impacted by Bitcoin's actions. So when Bitcoin goes up, it went up 10.5%. And on the other side, Ethereum went up 17.83%. So on a downside on Bitcoin is translating into less downside on Ethereum, but the upside is still intact. So what does that tell you? There's a major shift happening to where there's more confidence and more strength being shown in Ethereum over Bitcoin, which historically, when we're having a really emotional, very volatile time, everyone flows to Bitcoin. They all run to Bitcoin for safety. What we're seeing is that a lot of people are running to Ethereum for safety, which is a complete shift. This has never happened. Believe me, I've been in crypto for 10 years. I've watched these charts every day, all day long for 10 years because I am a nerd. And this is completely unusual. Now look what's happening today. We have Bitcoin dropping 4%. We have Ethereum dropping 3%. So now Ethereum is actually creating, it's actually being impacted less than the actions of Bitcoin. So it is a fundamental, tangible difference. I think everybody that's been in this space that really has paid attention is, if you haven't noticed this, or maybe you haven't put it into words, something's happening. Ethereum is showing more strength than ever, and it is amazing. So I'll just zoom out a little bit, and you can just kind of see there's a lot of evidence of that also, because even though the shape of this is generally about the same, Look how far below the 200-week moving average we are on Bitcoin. And on Ethereum, we're really trying hard to recover it. And in fact, we did not have a cycle low. Only Bitcoin had the cycle low. So there's a shift happening. There's more money being brought into Ethereum, which means from a purely investment standpoint, it has become the preferred instrument over Bitcoin. That's a statement I never thought in a million years I would say. But it's kind of incredible that things are kind of changing in this way. So thought that would be kind of fun and interesting to share with you guys today. As far as the rest of the market, with Bitcoin and Ethereum down, the rest of the market's doing exactly what you'd expect. They're down way more. So alts are being quite volatile. A couple of random winners. I don't know why People is popping up so well, but it is. It's down from where it was earlier today. And the ones that should be in a better position are the ones that are down here in this trading area. So DYDX was kind of a surprise. That thing is breaking new territory. The rest are just kind of hanging in there, but we're at least in a good trading range. So that's about everything I wanted to talk about today. I'm looking forward to kind of seeing how things play out. But as far as close today goes, we really would like to see Bitcoin above that 50% mark. Ethereum's, it's really, even our low was about the 50%. So Ethereum's just looking very, very strong. So I guess if I was, if I had money and I only had a choice between Bitcoin and Ethereum right now, it is just from a purely, fundamental and technical viewpoint, I would absolutely look at Ethereum. Okay, well, I hope everyone recovers from all of the fallout. I know that Bitcoin's probably under extra stress because of all of the FTX business and all of the bankruptcy announcements. That's usually where people store the majority of their money, so it is getting liquidated first. But there's a lot of buyers out there, and I just think that after a selling climax, this is where we look for recovery. I really think we go sideways for a couple of months and then start regaining our footing. So that's kind of what I'm expecting. All right, everyone have a good day. We'll talk to you tomorrow. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.